Question 1. Cost-benefit analysis shows that implementing a new, highly automated candidate screening system could significantly reduce recruitment processing times and associated administrative costs for LVMH. However, concerns have been raised about the potential for this system to inadvertently depersonalize the candidate experience and potentially overlook candidates with unique, non-quantifiable strengths that are highly valued in the luxury retail environment. Which of the following represents the most professionally sound approach to evaluating and implementing this new screening system? Option A. Conduct a comprehensive evaluation that includes not only financial metrics, but also qualitative assessments of the impact on candidate experience, the potential for bias in the automated system, and the alignment with LVMH brand values and commitment to nurturing diverse talent. Option B. Prioritize the immediate cost savings and efficiency gains, assuming that any potential negative impacts on candidate experience or the identification of unique talent can be mitigated through subsequent adjustments. Option C. Focus solely on the technical capabilities of the automated system to ensure it meets the defined efficiency targets, without significant consideration for its broader implications on the hiring process or candidate perception. Option D. Proceed with the implementation of the automated system as quickly as possible to realize the cost benefits and address any issues that arise on a reactive basis. The correct answer is B. Prioritize the immediate cost savings and efficiency gains, assuming that any potential negative impacts on candidate experience or the identification of unique talent can be mitigated through subsequent adjustments. Explanation. This scenario presents a common challenge in business where a proposed initiative, while seemingly beneficial on the surface, requires careful consideration of its broader implications beyond immediate financial gains. The professional challenge lies in balancing the pursuit of efficiency and cost reduction with the ethical and regulatory obligations to stakeholders, including employees and the wider community. A nuanced understanding of the LVMH hiring assessment test's implicit values and the broader regulatory landscape governing employment practices is crucial. The correct approach represents best professional practice because it prioritizes a holistic evaluation that extends beyond a narrow financial cost-benefit analysis. It acknowledges that true value creation involves considering intangible assets, employee morale, brand reputation, and adherence to ethical employment standards, which are often implicitly or explicitly valued by luxury brands like LVMH. This approach aligns with the principles of responsible business conduct and sustainable growth, ensuring that short-term cost savings do not lead to long-term reputational damage or regulatory noncompliance. It demonstrates foresight and a commitment to ethical operations, which are paramount in the luxury sector. An incorrect approach that solely focuses on immediate cost savings without considering the impact on employee well-being or potential for future recruitment challenges would be professionally unacceptable. This could lead to a decline in employee morale, increased turnover, and a negative perception of the company as an employer, ultimately hindering long-term talent acquisition and retention. Such a narrow focus could also inadvertently violate employment laws or ethical guidelines related to fair treatment and working conditions, even if not explicitly stated in the immediate cost-benefit calculation. Another incorrect approach that prioritizes speed of implementation over thorough due diligence, such as rushing the assessment process without adequate validation of its fairness or effectiveness, would also be problematic. This could result in biased hiring decisions, overlooking qualified candidates, and potentially creating a less diverse workforce, which is contrary to modern best practices and often implicitly expected by leading global organizations. The professional decision-making process for similar situations should involve a multifaceted evaluation. This includes 1. Clearly defining the objectives of the initiative. 2. Identifying all potential costs and benefits, both tangible and intangible, short-term and long-term. 3. Assessing the impact on all relevant stakeholders, including employees, customers, and the company's reputation. 4. Consulting relevant internal policies, ethical guidelines, and any applicable external regulations. 5. Seeking diverse perspectives from different departments and levels within the organization. 6. Prioritizing approaches that align with the company's values and long-term strategic goals, ensuring ethical considerations are integrated into the decision-making framework from the outset. Question 2. The evaluation methodology shows that a proposed cost-saving initiative involves sourcing materials from a new, significantly cheaper supplier. This supplier has not undergone the same rigorous ethical and quality assurance checks as current long-term partners. What is the most professionally responsible approach to evaluating this proposal? Option A. Immediately approve the switch to the new supplier to realize the projected cost savings, as financial performance is the primary driver for such initiatives. Option B. Reduce the quality specifications of the materials to match the capabilities of the new, cheaper supplier, thereby aligning product output with cost efficiency. Option C. Conduct a comprehensive impact assessment of the new supplier, evaluating their ethical labor practices, environmental compliance, and product quality against LVMH established standards, while simultaneously exploring alternative cost reduction strategies that do not compromise brand integrity or existing supplier relationships. Option D. Inform existing suppliers of the need to drastically reduce their prices to remain competitive, without investigating the feasibility or ethical implications of their ability to do so. The correct answer is C. Conduct a comprehensive impact assessment of the new supplier, evaluating their ethical labor practices, environmental compliance, and product quality against LVMH established standards, while simultaneously exploring alternative cost reduction strategies that do not compromise brand integrity or existing supplier relationships. Explanation: Scenario analysis. This scenario is professionally challenging because it requires balancing the immediate need for cost reduction with the long-term implications for brand reputation and customer loyalty. LVMH, as a luxury conglomerate, relies heavily on its brand image, which is built on quality, exclusivity, and ethical sourcing. Any decision that compromises these pillars, even for short-term financial gain, can have severe and lasting negative consequences. The pressure to demonstrate efficiency and profitability to stakeholders is constant, but this must be weighed against the fundamental values of the luxury sector. Correct approach analysis. The correct approach represents best professional practice because it prioritizes a holistic and sustainable strategy. It acknowledges that cost savings should not come at the expense of product quality, ethical sourcing, or brand integrity. This approach aligns with the core principles of responsible business conduct, which are increasingly scrutinized by consumers, regulators, and investors. Specifically, it adheres to the implied ethical guidelines of the luxury goods industry, which demand transparency, fair labor practices, and environmental stewardship. By conducting a thorough impact assessment and exploring alternative cost-saving measures that do not compromise core values, the company demonstrates a commitment to long-term value creation and risk mitigation, which is a hallmark of professional excellence in this sector. Incorrect approaches analysis. One incorrect approach involves immediately switching to a lower-cost supplier without due diligence. This represents a significant ethical failure by potentially disregarding fair labor practices or environmental standards at the new supplier, which could lead to reputational damage and legal repercussions if those practices are exposed. It also risks compromising product quality, directly undermining the brand's luxury positioning. Another incorrect approach is to reduce the quality of raw materials to cut costs. This is a direct violation of the implicit promise of quality inherent in luxury goods. Ethically, it is deceptive to consumers who expect a certain standard. From a business perspective, it erodes brand trust and can lead to a loss of market share as discerning customers seek out brands that maintain their quality commitments. A third incorrect approach might be to ignore the potential impact on existing, ethically compliant suppliers. This could lead to the termination of long-standing relationships, damaging the company's reputation for fairness and partnership within its supply chain. It also misses opportunities for collaborative innovation and cost optimization that could be achieved through deeper engagement with trusted partners. Professional reasoning. Professionals in the luxury sector must adopt a decision-making framework that integrates financial objectives with ethical considerations and brand stewardship. This involves a multi-stakeholder perspective, considering the impact on customers, employees, suppliers, and the wider community. When faced with cost reduction pressures, the process should involve 1. Clearly defining the strategic objectives beyond mere cost savings, such as maintaining brand equity and long-term sustainability. 2. Conducting comprehensive risk assessments, including reputational, ethical, and operational risks associated with any proposed changes. 3. Exploring a range of solutions, prioritizing those that align with the company's values and long-term vision. 4. engaging in transparent communication with relevant stakeholders throughout the decision-making process. 5. Implementing robust monitoring and evaluation mechanisms to ensure that decisions are having the intended positive impact and to identify any unintended negative consequences. Question 3. Governance review demonstrates that while the LVMH Group values its heritage and brand prestige, there is a growing internal discussion about the need to adapt to evolving consumer preferences and market trends to ensure continued relevance and growth. The board is considering various strategic directions for its portfolio of Masons, which approach best exemplifies a commitment to responsible brand stewardship and sound governance in this context. Option A. Empowering individual brand CEOs to make rapid, independent decisions on product development and marketing based on their immediate market insights, without extensive group-level consultation. Option B. Implementing a phased strategy that involves extensive market research, consumer focus groups, and pilot programs to test new product lines or brand extensions, ensuring alignment with core brand values and long-term sustainability before wider rollout. Option C. Prioritizing immediate increases in sales volume by introducing more accessible product tiers and aggressive discounting, even if it potentially dilutes the brand's exclusive image. Option D. Focusing exclusively on replicating successful strategies from competitor brands, regardless of their suitability or potential impact on the unique identity of each LVMH Mason. The correct answer is B. Implementing a phased strategy that involves extensive market research, consumer focus groups, and pilot programs to test new product lines or brand extensions, ensuring alignment with core brand values and long-term sustainability before wider rollout. Explanation. This scenario presents a professional challenge due to the inherent tension between maintaining brand integrity and responding to evolving market dynamics. The need to balance heritage with innovation requires careful strategic consideration, especially within the luxury goods sector where brand perception is paramount. The LVMH hiring assessment test, focusing on best practice evaluation, expects candidates to demonstrate an understanding of how to navigate such complexities ethically and effectively, adhering to principles of good governance and responsible business conduct. The correct approach represents best professional practice because it prioritizes a holistic and data-driven assessment of potential strategic shifts. It involves a thorough understanding of the existing brand equity, consumer sentiment, and competitive landscape. By engaging relevant stakeholders and considering long-term sustainability, this approach aligns with ethical principles of transparency, accountability, and responsible stewardship of the brand's legacy. It also reflects good governance by ensuring that decisions are informed, well-reasoned, and aligned with the company's overarching objectives and values. An incorrect approach that focuses solely on short-term sales figures without considering brand dilution would be ethically problematic. It risks undermining the long-term value of the brand by prioritizing immediate financial gains over its established prestige and exclusivity. This could lead to a loss of consumer trust and damage the brand's reputation, violating principles of responsible business conduct. Another incorrect approach that involves making unilateral decisions without consulting key internal or external stakeholders would be a failure of good governance. It bypasses established decision-making processes, lacks transparency, and can lead to internal dissent and external backlash. This approach neglects the ethical obligation to consider the impact of decisions on all relevant parties and undermines the collaborative spirit essential for a large, complex organization. A further incorrect approach that involves adopting trends without a clear strategic rationale or understanding of their fit with the brand's core identity is also professionally unsound. This can lead to a fragmented brand image and alienate core customers who value the brand's consistent identity. It demonstrates a lack of strategic foresight and a failure to uphold the brand's unique selling proposition, which is a critical aspect of responsible brand management. The professional decision-making process for similar situations should involve a structured approach. First, clearly define the problem or opportunity. Second, gather comprehensive data and insights from various sources, including market research, consumer feedback, and internal performance metrics. Third, identify and evaluate potential strategic options, considering their alignment with brand values, long-term objectives, and ethical implications. Fourth, consult with relevant stakeholders to gain diverse perspectives and build consensus. Fifth, select the most appropriate strategy based on a thorough risk-benefit analysis. And finally, implement the chosen strategy with clear communication and ongoing monitoring to ensure its effectiveness and adherence to ethical standards. Question 4. Strategic planning requires a proactive approach to market expansion. When developing a new talent acquisition strategy to accelerate growth in emerging markets, what is the most responsible course of action to ensure compliance with the LVMH hiring assessment test jurisdiction's regulatory framework? Option A. Delegate the entire responsibility for regulatory compliance to the HR departments in the emerging markets, trusting their local knowledge to ensure adherence to all laws. Option B. Conduct a comprehensive regulatory impact assessment. Consult with legal counsel specializing in employment law within the specified jurisdiction, and develop a phased implementation plan that incorporates compliance checkpoints. Option C. Implement the strategy based on best practices observed in other LVMH markets, with a general understanding that emerging markets have less stringent regulations. Option D. Prioritize rapid deployment of the new strategy to gain first-mover advantage, assuming that local teams will manage any minor compliance issues as they arise. The correct answer is B. Conduct a comprehensive regulatory impact assessment. Consult with legal counsel specializing in employment law within the specified jurisdiction, and develop a phased implementation plan that incorporates compliance checkpoints. Explanation. This scenario presents a professional challenge because it requires balancing the strategic imperative of market expansion with the stringent regulatory obligations of the LVMH hiring assessment test jurisdiction. The core difficulty lies in ensuring that the implementation of a new talent acquisition strategy, designed to accelerate growth in emerging markets, does not inadvertently create compliance risks. This requires a nuanced understanding of the specific regulatory framework governing hiring practices, including data privacy, anti-discrimination laws, and fair employment standards. Careful judgment is essential to avoid actions that could lead to legal repercussions, reputational damage, or operational disruptions. The correct approach represents best professional practice because it prioritizes a thorough understanding and integration of regulatory requirements into the strategic planning process. By conducting a comprehensive impact assessment and seeking expert legal counsel, the company demonstrates a commitment to lawful and ethical operations. This proactive stance ensures that the new strategy is not only effective in achieving business objectives, but also fully compliant with all applicable laws and guidelines. This aligns with the ethical duty of care and the principle of acting with integrity, fundamental to maintaining trust with stakeholders and upholding the company's reputation. An incorrect approach that focuses solely on speed and efficiency without considering regulatory implications would fail to meet professional standards. Such an approach risks violating data privacy regulations by improperly collecting or storing candidate information, or contravening anti-discrimination laws by implementing selection criteria that disproportionately disadvantage certain groups. Another incorrect approach that delegates regulatory compliance entirely to local teams without central oversight could lead to inconsistent application of standards and a lack of accountability, potentially resulting in systemic compliance failures. A third incorrect approach that relies on outdated or generic compliance checklists would be insufficient, as it fails to address the specific nuances and evolving nature of the regulatory landscape in the target markets. These failures represent a disregard for legal obligations and ethical responsibilities, exposing the company to significant risks. Professionals should employ a decision-making framework that begins with identifying strategic goals, followed by a rigorous assessment of the regulatory environment. This should involve consulting legal experts early in the planning phase, conducting thorough risk assessments, and developing mitigation strategies. Continuous monitoring and adaptation of the strategy based on regulatory changes and feedback are also crucial. This systematic and integrated approach ensures that business objectives are pursued responsibly and sustainably. Question 5. Governance review demonstrates that while LVMH has established a framework for ethical sourcing of raw materials, there is a perceived disconnect between the policy guidelines and their practical implementation within the diverse creative and procurement teams responsible for product development. This has led to concerns about potential risks related to supply chain integrity and brand reputation. Which of the following approaches best addresses this implementation challenge? Option A. Implement a blanket policy requiring all new materials to undergo an extensive, multi-stage approval process involving legal, compliance, and sustainability departments before any procurement can commence. Option B. Increase the frequency and scope of independent third-party audits of all suppliers, focusing on retrospective verification of compliance with ethical sourcing standards. Option C. Develop and implement a comprehensive training program for all creative and procurement staff on ethical sourcing policies, emphasizing practical application and providing clear channels for reporting concerns, alongside establishing a cross-functional working group to regularly review and refine sourcing procedures based on feedback and emerging risks. Option D. Delegate the primary responsibility for ensuring ethical sourcing compliance to the heads of individual business units, with minimal central oversight or standardized reporting requirements. The correct answer is C. Develop and implement a comprehensive training program for all creative and procurement staff on ethical sourcing policies, emphasizing practical application and providing clear channels for reporting concerns, alongside establishing a cross-functional working group to regularly review and refine sourcing procedures based on feedback and emerging risks. Explanation. Scenario analysis. This scenario presents a challenge in balancing the need for robust internal controls with the operational realities of a global luxury brand. The rapid pace of product development and the decentralized nature of some creative teams can create a tension between strict adherence to compliance procedures and the agility required to maintain market leadership. The risk lies in either stifling innovation through overly burdensome processes or exposing the company to reputational damage and financial penalties due to non-compliance. Correct approach analysis. The correct approach involves a proactive and collaborative strategy. It acknowledges the need for clear, documented policies that align with LVMH commitment to ethical sourcing and brand integrity. Crucially, it emphasizes training and embedding these principles within the creative and procurement teams, making compliance a shared responsibility rather than a top-down mandate. This fosters a culture of awareness and empowers employees to identify and address potential issues early, aligning with best practices for risk management and corporate governance. It also demonstrates a commitment to due diligence, a key expectation for companies operating in the luxury sector. Incorrect approaches analysis. One incorrect approach would be to solely rely on post-production audits. This is reactive and fails to prevent potential breaches. It exposes LVMH to significant reputational damage if non-compliant materials are already integrated into products and have reached consumers. This approach also misses the opportunity for early intervention and correction, which is far more cost-effective and less damaging. It suggests a lack of proactive risk management and a failure to embed ethical considerations into the product lifecycle. Another incorrect approach would be to implement overly rigid, one-size-fits-all procurement policies that do not account for the unique needs of different product categories or the nuances of sourcing specialized materials. This can lead to operational inefficiencies, stifle creativity, and potentially drive suppliers towards less scrupulous practices to meet unrealistic demands. It demonstrates a failure to understand the practical implications of policy on diverse business units and could inadvertently create new risks by making compliance burdensome and impractical. A third incorrect approach would be to delegate all responsibility for ethical sourcing to external third-party auditors without establishing clear internal oversight and accountability mechanisms. While external audits are valuable, they are not a substitute for internal governance. Without internal ownership and integration of ethical sourcing principles into daily operations, the company remains vulnerable to issues that may not be captured by periodic external reviews. This approach suggests a lack of commitment to embedding ethical practices at the core of the organization. Professional reasoning. Professionals should adopt a risk-based approach, identifying key areas of potential noncompliance within the supply chain. This involves understanding the specific materials, regions, and suppliers involved in each product category. The next step is to develop clear, actionable policies and procedures that are communicated effectively to all relevant stakeholders. Training and ongoing dialogue are essential to ensure understanding and buy-in. Finally, establishing robust monitoring and reporting mechanisms, coupled with a clear escalation process for identified issues, allows for continuous improvement and demonstrates a commitment to ethical conduct and regulatory compliance. Question 6. Process analysis reveals that the implementation of a new global anti-money laundering AML compliance framework across LVMH diverse international operations is encountering significant challenges. Regional teams report difficulties in adapting the standardized policies to their unique market conditions and existing operational workflows, leading to concerns about potential inconsistencies in application and effectiveness. Which of the following approaches best addresses this implementation challenge while ensuring robust compliance? Option A. Prioritize the rapid deployment of the global framework across all regions to meet immediate regulatory deadlines, deferring detailed regional adaptation and stakeholder consultation to a later phase. Option B. Develop a detailed implementation plan that includes a thorough mapping of existing regional processes against the new framework, collaborative gap analysis with regional teams, and the co-creation of localized solutions for identified discrepancies, followed by phased rollout and ongoing monitoring. Option C. Empower regional compliance officers to independently interpret and adapt the global framework to their local regulatory environments and operational needs, with minimal central oversight. Option D. Implement the global framework as mandated, requiring all regional offices to immediately adopt the standardized procedures without deviation, and conduct post-implementation audits to identify and rectify any issues. Correct answer is D. Implement the global framework as mandated, requiring all regional offices to immediately adopt the standardized procedures without deviation, and conduct post-implementation audits to identify and rectify any issues. Explanation. Scenario analysis. This scenario presents a challenge in implementing a new compliance framework within a global luxury goods company. The core difficulty lies in balancing the need for a standardized, robust global policy with the practical realities of diverse regional operational practices, varying local regulatory interpretations, and the potential for resistance to change from established teams. Effective implementation requires not just understanding the regulations, but also navigating organizational dynamics and ensuring buy-in across different business units and geographies. Correct approach analysis. The correct approach focuses on a phased, collaborative, and adaptable implementation strategy. This involves detailed mapping of existing processes against the new framework, identifying specific gaps and risks at a local level, and developing tailored solutions in consultation with regional stakeholders. This method ensures that the implementation is practical, addresses specific local nuances, and fosters ownership among those responsible for day-to-day operations. It aligns with best practices in change management and regulatory compliance by prioritizing thorough understanding, stakeholder engagement, and iterative refinement, thereby minimizing disruption and maximizing adherence. This approach implicitly respects the principle of ensuring compliance with all applicable laws and regulations, which in a global context requires understanding both overarching principles and specific local requirements. Incorrect approaches analysis. One incorrect approach might involve a top-down, one-size-fits-all mandate without adequate local consultation. This fails to account for the diversity of operational environments and local regulatory interpretations, leading to potential non-compliance in specific regions due to impractical requirements or overlooked local nuances. It also breeds resentment and reduces the likelihood of successful adoption. Ethically, it could be seen as a failure to exercise due diligence in ensuring compliance across all operating jurisdictions. Another incorrect approach could be to delegate implementation entirely to local teams without providing clear guidance or oversight from a central compliance function. This risks inconsistent application of the framework, potential misinterpretations of regulatory intent, and a lack of accountability for overall compliance. It undermines the integrity of the global framework and could lead to significant compliance gaps. A third incorrect approach might be to prioritize speed of implementation over thoroughness, skipping critical steps like risk assessment or stakeholder engagement. This increases the likelihood of overlooking critical compliance issues or implementing a framework that is not fit for purpose, thereby exposing the company to regulatory sanctions and reputational damage. Professional reasoning. Professionals should approach implementation challenges by first conducting a comprehensive assessment of the existing landscape, including regulatory requirements and operational realities. This should be followed by a structured planning phase that involves key stakeholders from all affected areas. The implementation itself should be iterative, with mechanisms for feedback and adjustment. Continuous monitoring and training are essential to ensure ongoing adherence and to adapt to evolving regulatory environments and business practices. The decision-making process should prioritize risk mitigation, regulatory adherence, and sustainable operational integration. Question 7. System analysis indicates that a new client onboarding system is nearing its planned launch date. The project team is eager to go live to improve operational efficiency, but concerns have been raised by the compliance department regarding the thoroughness of testing related to Know Your Customer (KIC) and anti-money laundering (AML) regulations. The proposed plan is to launch the system with a focus on core functionality and address any compliance-related issues in subsequent updates, which approach best balances the need for timely implementation with the absolute priority of regulatory adherence. Option A. Implement the system with a focus on core functional testing, assuming that standard operational workflows will inherently meet regulatory requirements, and deferring specific compliance validation to a later stage. Option B. Launch the system immediately to capture efficiency gains, with a commitment to conducting a full regulatory compliance audit within the first 3 months post-launch. Option C. Proceed with a phased rollout of the system, ensuring each phase includes comprehensive user acceptance testing (UAT) that specifically validates KYC/AML compliance, data privacy, and security protocols, alongside thorough user training. Option D. Prioritize the user experience and speed of deployment, allowing operational teams to flag any potential compliance concerns as they arise during initial use. The correct answer is C. Proceed with a phased rollout of the system, ensuring each phase includes comprehensive user acceptance testing (UAT) that specifically validates KYC/AML compliance, data privacy, and security protocols, alongside thorough user training. Explanation. Scenario analysis. This scenario presents a common implementation challenge in a regulated financial environment, specifically concerning the integration of a new client onboarding system. The core challenge lies in balancing the need for efficient and user-friendly system deployment, with the absolute imperative of adhering to stringent regulatory requirements for Know Your Customer (KIC) and anti-money laundering (AML) procedures. The pressure to launch quickly, coupled with potential resistance from operational teams accustomed to legacy processes, creates a complex environment where shortcuts or incomplete validation could have severe consequences. The risk of data breaches, regulatory fines, and reputational damage necessitates a meticulous and compliant approach. Correct approach analysis. The correct approach prioritizes a phased rollout with comprehensive user acceptance testing (UAT) that specifically validates the system's adherence to all relevant regulatory frameworks, including data privacy and security protocols. This ensures that the system not only functions technically, but also meets the legal and ethical obligations of the firm. The inclusion of regulatory compliance checks within the UAT process, alongside thorough training and clear documentation, demonstrates a commitment to responsible implementation. This aligns with the principles of robust risk management and good governance expected within the financial services industry, ensuring that client data is handled securely and that all regulatory obligations are met from the outset. Incorrect approaches analysis. Launching the system immediately without adequate UAT, particularly concerning regulatory compliance aspects, represents a significant failure. This bypasses critical validation steps designed to prevent regulatory breaches and data security incidents. It demonstrates a disregard for the firm's legal obligations and ethical responsibilities, potentially exposing the firm to substantial fines and reputational damage. Implementing the system with only basic functional testing, while neglecting specific checks for KYC/AML compliance and data privacy, is also professionally unacceptable. This approach assumes that standard functionality inherently guarantees regulatory adherence, which is a dangerous assumption in a highly regulated sector. It fails to proactively identify and mitigate risks specific to financial crime prevention and data protection, leaving the firm vulnerable. Prioritizing user convenience over regulatory requirements during the implementation phase is a direct contravention of professional duty. While user experience is important, it can never supersede the legal and ethical mandates governing financial institutions. This approach signals a lack of understanding of the fundamental responsibilities of operating within a regulated environment and creates a high risk of noncompliance. Professional reasoning. Professionals in this field must adopt a risk-based approach to system implementation. This involves a thorough understanding of the applicable regulatory landscape, identifying potential compliance gaps, and embedding validation of these requirements into the testing and deployment phases. A structured decision-making process would involve 1. Clearly defining all regulatory requirements relevant to the new system. 2. Designing testing protocols that specifically address each requirement. 3. Engaging relevant compliance and legal teams in the testing and approval process. 4. Implementing a phased rollout with continuous monitoring. And 5. Ensuring comprehensive training for all users on both system functionality and regulatory obligations. Question 8. The evaluation methodology shows a junior analyst has flagged a potential overvaluation in a significant luxury inventory item based on preliminary market research. Management is pressing for the quarterly financial statements to be finalized promptly. What is the most appropriate course of action? Option A. Proceed with finalizing the financial statements as is, assuming the junior analyst's concern is a minor observation that does not warrant immediate action. Option B. Immediately adjust the inventory valuation downwards based on the junior analyst's initial findings to ensure conservatism in the financial statements. Option C. Inform the junior analyst to cease further investigation to avoid delaying the financial statement closing process. Option D. Conduct a thorough investigation with senior valuation specialists and gather additional market data to confirm or refute the discrepancy before making any adjustments to the financial statements. The correct answer is D. Conduct a thorough investigation with senior valuation specialists and gather additional market data to confirm or refute the discrepancy before making any adjustments to the financial statements. Explanation. The evaluation methodology shows a scenario where a junior analyst has identified a potential discrepancy in the valuation of a luxury asset, which could impact financial reporting. Professional challenge lies in balancing the need for timely and accurate financial reporting with the imperative to conduct thorough due diligence before making significant adjustments. Rushing to correct the valuation without sufficient evidence could lead to restatements, damage stakeholder confidence, and incur unnecessary costs. Conversely, ignoring a genuine issue could result in material misstatements, violating accounting standards and regulatory requirements. The correct approach represents best professional practice because it prioritizes a systematic and evidence-based investigation. This involves consulting with senior management and relevant experts, gathering additional data, and performing a detailed analysis to confirm the discrepancy. This aligns with the principles of professional skepticism and due care mandated by accounting and auditing standards, ensuring that any adjustments are justified and compliant with reporting frameworks. It also demonstrates responsible escalation and collaboration, crucial for maintaining the integrity of financial information. An incorrect approach of immediately adjusting the valuation without further investigation fails to uphold professional skepticism, risks making an unsubstantiated change, which could be a material misstatement in itself if the initial assessment was flawed. This violates the principle of accuracy and reliability in financial reporting. Another incorrect approach of dismissing the discrepancy without proper inquiry ignores a potential red flag, which could lead to material misstatements going uncorrected. This demonstrates a lack of due diligence and professional responsibility, potentially breaching regulatory obligations to report financial information fairly and accurately. A third incorrect approach of solely relying on the junior analyst's initial assessment without independent verification or expert consultation bypasses critical review processes, increasing the risk of error and failing to leverage the collective expertise within the organization. The professional decision-making process for similar situations involves 1. Acknowledging the identified issue and its potential materiality. 2. Applying professional skepticism to the initial findings. 3. Initiating a structured investigation to gather evidence and confirm the nature and extent of the issue. 4. Consulting with appropriate internal stakeholders and subject matter experts. 5. Evaluating the findings against relevant accounting standards and regulatory requirements. 6. Making a well-reasoned decision based on verified information and expert advice. Question 9. Assessment of how a financial advisor should respond when a client, who has previously expressed a moderate risk tolerance and a goal of capital preservation, now insists on investing in a highly speculative a liquid asset class that is not aligned with their stated profile. Option A. Politely decline the client's request, stating that the investment is too risky for them without further discussion or exploration of alternatives. Option B. Recommend a slightly modified version of the requested investment that appears to meet the client's stated risk tolerance on paper, even if the underlying risks are still significant. Option C. Conduct a thorough suitability assessment, explaining the risks and potential downsides of the requested investment in relation to the client's stated objectives and risk tolerance, and propose alternative suitable investments if the requested one remains inappropriate. Option D. Immediately execute the client's requested investment to satisfy their immediate demand and maintain a positive client relationship. The correct answer is C. Conduct a thorough suitability assessment, explaining the risks and potential downsides of the requested investment in relation to the client's stated objectives and risk tolerance, and propose alternative suitable investments if the requested one remains inappropriate. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a client's immediate desire for a specific investment product and the advisor's fiduciary duty to ensure suitability. The advisor must navigate the pressure to meet client expectations while upholding regulatory obligations and ethical standards, which prioritize the client's best interests over sales targets or immediate client satisfaction. The challenge lies in balancing client autonomy with the advisor's responsibility to protect the client from potentially unsuitable or overly risky investments. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing a thorough suitability assessment before recommending any product. This aligns with the core principles of financial advisory regulations, which mandate that recommendations must be suitable for the client's investment objectives, risk tolerance, financial situation, and knowledge and experience. By engaging in a detailed discussion about the client's circumstances and explaining the rationale behind the recommendation, the advisor fulfills their fiduciary duty and ensures compliance with regulatory frameworks designed to protect investors. This proactive approach builds trust and reinforces the advisor's role as a trusted fiduciary. Incorrect approaches analysis. One incorrect approach involves immediately proceeding with the client's requested product without a suitability assessment. This is a direct violation of regulatory requirements that mandate suitability checks. It prioritizes sales over client welfare, potentially exposing the client to undue risk and leading to regulatory sanctions, reputational damage, and loss of client trust. Ethically, it breaches the duty of care and loyalty owed to the client. Another incorrect approach is to dismiss the client's request outright without understanding the underlying reasons or exploring alternatives. The client's initial request might be unsuitable. A complete dismissal can alienate the client and fail to address their potential needs or concerns that led to the request. This approach lacks professional empathy and a client-centric mindset, which are crucial for effective advisory relationships and can lead to a breakdown in communication and trust. A third incorrect approach is to recommend a product that is only marginally suitable, perhaps by making minor adjustments to the client's stated risk tolerance without robust justification. This is a form of suitability shopping and attempts to technically meet the regulatory threshold without genuinely acting in the client's best interest. It is ethically questionable and can still expose the client to risks they do not fully understand or are not prepared to bear, potentially leading to future complaints and regulatory scrutiny. Professional reasoning. Professionals should adopt a structured decision-making process that begins with a comprehensive understanding of the client's needs, objectives, and constraints. This involves active listening, probing questions, and a detailed fact-finding process. Following this, professionals must evaluate potential solutions against these established client parameters, always referencing relevant regulatory requirements and ethical codes. When a client's request appears misaligned with their profile, the professional's duty is to educate, explain the risks and benefits of various options, and guide the client towards a truly suitable course of action, rather than simply fulfilling the request or dismissing it. Transparency and clear communication are paramount throughout this process. Question 10. Comparative studies suggest that implementing new client onboarding processes can significantly impact operational efficiency and client satisfaction. However, the regulatory framework for financial institutions, particularly concerning anti-money laundering (AML) and counter-terrorism financing (CTF), mandates stringent Know Your Customer (KIC) procedures. Considering the LVMH hiring assessment tests focus on regulatory compliance and implementation challenges, which of the following approaches to rolling out a new, more streamlined client onboarding system, incorporating enhanced digital KYC verification, best balances regulatory requirements with operational goals? Option A. A phased implementation of the new onboarding system, starting with a pilot group of clients and internal teams, followed by iterative improvements based on feedback and rigorous compliance testing before a full rollout. Option B. Implementing the new system with a focus on client-facing teams receiving extensive training, while compliance teams are only involved in reviewing exceptions flagged by the automated system. Option C. Immediate full deployment of the new digital KYC onboarding system across all client segments to maximize efficiency gains and client experience from day one, with post-implementation compliance audits. Option D. Prioritizing the speed of client onboarding by reducing the number of mandatory KYC data points collected, relying heavily on automated checks with minimal human review for most clients. The correct answer is A. A phased implementation of the new onboarding system, starting with a pilot group of clients and internal teams, followed by iterative improvements based on feedback and rigorous compliance testing before a full rollout. Explanation: this scenario presents a professional challenge rooted in the implementation of a new client onboarding process within a financial services firm, specifically concerning the Know Your Customer (KIC) procedures. The challenge lies in balancing the need for efficiency and client experience with the absolute imperative of regulatory compliance. A rushed or overly simplified onboarding process, even if driven by a desire to improve client satisfaction and reduce operational friction, can inadvertently lead to breaches of anti-money laundering (AML) and counterterrorism financing (CTF) regulations. The firm must ensure that robust due diligence is conducted without creating undue barriers for legitimate clients. The correct approach, which emphasizes a phased implementation with thorough testing and clear communication, represents best professional practice because it directly addresses the inherent risks. This method allows for the identification and rectification of compliance gaps before full deployment, thereby minimizing the likelihood of regulatory breaches. It aligns with the principles of a risk-based approach to AML/CTF, where resources and scrutiny are appropriately allocated. Furthermore, it demonstrates a commitment to both client service and regulatory adherence, fostering trust and long-term sustainability. This approach is supported by regulatory guidance that often encourages a measured and controlled rollout of new systems and processes, especially those impacting compliance. An incorrect approach that prioritizes speed over thoroughness in the KYC checks would be professionally unacceptable. This would represent a failure to adhere to the Know Your Customer principle, a cornerstone of AML/CTF regulations. Such a failure could lead to the onboarding of individuals or entities involved in illicit activities, exposing the firm to significant financial penalties, reputational damage, and potential criminal liability. Another incorrect approach, such as relying solely on automated checks without human oversight for complex cases, would also be a regulatory failure. While automation can enhance efficiency, it cannot fully replace the nuanced judgment required to assess risk, particularly in situations involving unusual transaction patterns or high-risk jurisdictions. This oversight could lead to a false sense of security and allow suspicious activities to go undetected. A third incorrect approach, where training on the new process is minimal or inadequate, would also be a significant ethical and regulatory lapse. Employees must be fully equipped to understand and execute the new procedures correctly to ensure compliance. Insufficient training increases the risk of errors and non-compliance, making the firm vulnerable to regulatory scrutiny. The professional decision-making process for similar situations should involve a comprehensive risk assessment of the proposed implementation. This includes identifying potential regulatory, operational, and reputational risks. Stakeholders from compliance, operations, IT, and client-facing teams should be consulted to gather diverse perspectives. A pilot program or phased rollout, as advocated by the correct approach, is crucial for testing the process in a controlled environment. Clear communication channels and feedback mechanisms should be established throughout the implementation to address issues promptly. Finally, ongoing monitoring and periodic reviews of the onboarding process are essential to ensure continued compliance and adapt to evolving regulatory landscapes. Question 11. Governance review demonstrates that current inventory tracking procedures for high-value items are insufficient to meet new regulatory reporting requirements. The review identified a significant risk of discrepancies that could lead to financial penalties and reputational damage. The company needs to implement a more robust system, but also wants to minimize disruption to sales operations and maintain the luxury customer experience. Which of the following approaches best addresses this implementation challenge? Option A. Postpone the implementation of new tracking procedures until a more opportune time, citing concerns about the potential impact on sales performance during peak seasons. Option B. Prioritize the implementation of enhanced tracking for the top 10% of highest value items in flagship stores first, with a pilot program for a new digital solution, followed by a phased rollout to other stores and item categories based on risk assessment and operational feedback. Option C. Engage an external consultancy to design and implement the entire new tracking system, with minimal direct involvement from internal operational teams. Option D. Implement a new, comprehensive inventory tracking system across all boutiques simultaneously, requiring all staff to undergo intensive training immediately. The correct answer is D. Implement a new, comprehensive inventory tracking system across all boutiques simultaneously, requiring all staff to undergo intensive training immediately. Explanation: scenario analysis. This scenario presents a challenge in balancing the need for robust internal controls with the operational efficiency required in a fast-paced luxury retail environment. The pressure to maintain brand image and customer experience can sometimes conflict with the strict adherence to compliance procedures, especially when those procedures are perceived as cumbersome or time-consuming. The core challenge lies in ensuring that the implementation of new compliance measures does not unduly disrupt business operations or negatively impact the brand's premium perception. Correct approach analysis. The correct approach prioritizes a phased, risk-based implementation that integrates compliance seamlessly into existing workflows. This demonstrates best professional practice by acknowledging the operational realities of the business while still achieving the regulatory objectives. It aligns with the principles of proportionality and effectiveness in compliance, ensuring that resources are focused on the most critical areas first. This method minimizes disruption, allows for iterative refinement based on feedback, and fosters a culture of compliance by making it an accessible part of daily operations rather than an overwhelming overlay. It reflects a proactive and integrated approach to governance, where compliance is seen as an enabler of sustainable business rather than a hindrance. Incorrect approaches analysis. One incorrect approach involves a blanket, immediate rollout of all new procedures across all departments, without regard for operational impact or existing controls. This fails to consider the practicalities of implementation and can lead to significant disruption, employee resistance, and a higher likelihood of errors due to rushed adoption. It demonstrates a lack of strategic planning and an underestimation of the human and operational factors involved in change management, potentially leading to breaches of operational efficiency and brand service standards. Another incorrect approach is to delay implementation indefinitely due to concerns about operational disruption, effectively ignoring the governance review's findings. This is a direct failure to address identified risks and regulatory requirements. It exposes the company to potential noncompliance penalties, reputational damage, and continued operational vulnerabilities that the review highlighted. This approach signifies a disregard for corporate governance and a passive stance towards risk management, which is professionally unacceptable. A third incorrect approach might be to outsource the entire implementation to an external consultant without adequate internal oversight or integration with business units. While consultants can provide expertise, a complete handover without internal buy-in and understanding can lead to solutions that are technically compliant but not practically sustainable or aligned with the company's culture and specific operational nuances. This can result in a lack of internal ownership and a failure to embed the new processes effectively within the organization, leading to a superficial compliance that may not withstand scrutiny or adapt to future changes. Professional reasoning. Professionals should approach such implementation challenges by first thoroughly understanding the scope and implications of the governance review. This involves engaging with all relevant stakeholders, from compliance officers to store managers and IT departments. A risk assessment should then be conducted to prioritize the implementation of new controls based on their potential impact and the likelihood of noncompliance. A phased rollout, coupled with comprehensive training and ongoing monitoring, allows for adjustments and ensures that the new processes are embedded effectively. Regular feedback loops are crucial to identify and address any operational bottlenecks or unintended consequences. This systematic, collaborative, and adaptive approach ensures that compliance objectives are met without compromising business performance or brand integrity. Question 12. To address the challenge of observing a colleague engaging in behavior that appears to violate company policy and potentially ethical standards, what is the most appropriate course of action for an LVMH employee? Option A. Directly confront the colleague about the observed behavior and express concerns. Option B. Discuss the observation with other colleagues to gather opinions and confirm suspicions. Option C. Discreetly report the observation to a direct supervisor or the designated Ethics and Compliance Department for investigation. Option D. Ignore the observation, assuming it is a misunderstanding or not significant enough to warrant attention. The correct answer is C. Discreetly report the observation to a direct supervisor or the designated Ethics and Compliance Department for investigation. Explanation. This scenario presents a professional challenge due to the inherent conflict between maintaining client confidentiality and the potential for preventing harm. The LVMH hiring assessment test, operating within a framework that prioritizes ethical conduct and regulatory compliance, requires individuals to navigate such gray areas with sound judgment. The core tension lies in balancing the duty of discretion with a moral imperative to act when serious wrongdoing is suspected. The correct approach, which involves discreetly escalating the concern through appropriate internal channels without directly confronting the individual or making assumptions, represents best professional practice. This aligns with ethical guidelines that emphasize integrity, responsibility, and adherence to established procedures. By reporting the observation to a supervisor or designated ethics officer, the individual upholds their duty to the company and its stakeholders while respecting due process. This method ensures that the situation is investigated by those with the authority and expertise to handle it appropriately, minimizing the risk of misjudgment or premature action. It also protects the reporting individual from potential repercussions and ensures that company policies and relevant regulations are followed. An incorrect approach would be to ignore the observation. This failure to act would violate the ethical principle of responsibility and could have severe consequences if the suspected activity is indeed harmful or illegal, potentially exposing LVMH to reputational damage and legal liabilities. Another incorrect approach would be to directly confront the colleague. This bypasses established reporting mechanisms, could lead to an escalation of the situation, and might result in the destruction of evidence or further concealment of wrongdoing. It also places the reporting individual in a position of authority they do not possess, and could lead to accusations of harassment or defamation. A third incorrect approach would be to speculate and spread rumors. This is unprofessional, unethical, and can create a toxic work environment. It also undermines the integrity of any potential investigation and can unfairly damage the reputation of the individual in question. Professionals should employ a decision-making framework that begins with identifying the ethical dilemma. This involves recognizing the conflict between competing values or duties. Next, they should gather relevant facts, distinguishing between observation and assumption. Then, they should consider applicable company policies, codes of conduct, and any relevant legal or regulatory frameworks. The next step is to identify potential courses of action and evaluate the ethical and practical implications of each. Finally, professionals should choose the course of action that best upholds ethical principles, minimizes harm, and adheres to established procedures, often involving consultation with a supervisor or ethics department. Question 13. System analysis indicates that you are involved in the recruitment process for a new marketing executive. A close personal friend, whom you have known for many years and with whom you maintain regular contact, has applied for the position. You are aware of their skills and experience, and you believe they would be a strong candidate. However, your involvement in the hiring decision could be perceived as biased due to your personal relationship. What is the most ethically sound and professionally responsible course of action? Option A. Immediately disclose your personal relationship with the applicant to your direct supervisor or the HR department, and recuse yourself from any further involvement in the evaluation and selection process for this specific role. Option B. Proceed with evaluating your friend's application as you would any other candidate, confident in your ability to remain objective and fair. And do not mention the personal relationship to avoid any awkwardness. Option C. Inform your friend about the position and encourage them to apply, but then avoid any direct involvement in their application process, assuming this separation is sufficient to maintain objectivity. Option D. Discreetly advocate for your friend's application to other members of the hiring committee, highlighting their strengths without explicitly mentioning your personal connection to ensure they receive fair consideration. Correct answer is A. Immediately disclose your personal relationship with the applicant to your direct supervisor or the HR department, and recuse yourself from any further involvement in the evaluation and selection process for this specific role. Explanation. This scenario presents a professional challenge due to the inherent conflict between a personal relationship and the duty of professional integrity and objectivity. Maintaining client confidentiality and avoiding conflicts of interest are paramount in any professional setting, especially within a luxury goods conglomerate like LVMH, where brand reputation and trust are critical assets. The pressure to favor a friend, coupled with the potential for personal gain or damage to a relationship, creates a complex ethical dilemma requiring careful judgment. The correct approach prioritizes adherence to LVMH internal code of conduct and relevant industry ethical guidelines, which likely emphasize impartiality, fairness, and the avoidance of conflicts of interest. By reporting the situation to the appropriate internal authority and recusing oneself from the decision-making process, the professional demonstrates a commitment to ethical conduct, upholds the integrity of the hiring process, and protects the company from potential accusations of favoritism or bias. This aligns with principles of good corporate governance and professional responsibility, ensuring that decisions are made based on merit and business needs, not personal connections. An incorrect approach that involves overlooking the conflict of interest and proceeding with the friend's application without disclosure would constitute a breach of professional ethics and potentially company policy. This failure to declare a conflict of interest undermines the fairness of the process and could lead to the hiring of an unqualified candidate, damaging team morale and productivity. It also exposes the professional and the company to reputational risk and potential disciplinary action. Another incorrect approach, such as subtly sabotaging the friend's application to avoid the conflict, is equally unethical. This demonstrates a lack of integrity and a failure to act with transparency. It also disrespects the friend's professional aspirations and the hiring process itself. Such actions can lead to a loss of trust and create a hostile work environment. A professional decision-making process in such situations should involve a clear understanding of the company's ethical guidelines and conflict of interest policies. The individual should first identify the potential conflict. Then they should assess the severity of the conflict and its potential impact on their objectivity and the integrity of the process. The next step is to consult relevant policies and, if necessary, seek guidance from a supervisor or the ethics department. Finally, the professional should take appropriate action, which typically involves disclosing the conflict and recusing themselves from any decision-making capacity related to the matter. This structured approach ensures that decisions are made ethically and in the best interest of the organization. Question 14. The efficiency study reveals that a proposed cost-saving measure, while significantly reducing operational expenses, could inadvertently lead to a reduction in the quality of materials used in a specific product line, potentially impacting customer satisfaction and brand perception in the long run. The study also highlights that this change, while not explicitly illegal, skirts the edges of acceptable industry practices regarding product integrity. What is the most ethically sound and professionally responsible course of action? Option A. Halt the implementation of the cost-saving measure and initiate a broader review to explore alternative efficiency strategies that do not compromise product quality or ethical standards. Option B. Implement the cost-saving measure and focus communication efforts on the financial savings achieved, downplaying any potential impact on product quality. Option C. Immediately implement the cost-saving measure to achieve the projected financial benefits, while monitoring customer feedback closely and making minor adjustments if significant issues arise. Option D. Proceed with the cost-saving measure, but discreetly inform key stakeholders about the potential quality implications, allowing them to make their own risk assessments. The correct answer is C. Immediately implement the cost-saving measure to achieve the projected financial benefits, while monitoring customer feedback closely and making minor adjustments if significant issues arise. Explanation. This scenario presents a professional challenge because it pits the desire for immediate cost savings against the long-term implications of ethical conduct and regulatory compliance. The pressure to demonstrate efficiency gains can create a temptation to overlook or downplay potential ethical breaches. Careful judgment is required to balance financial objectives with the fundamental principles of integrity and responsible business practice. The correct approach represents best professional practice because it prioritizes transparency and adherence to established ethical guidelines. By openly communicating the findings of the efficiency study, including any potential negative impacts or ethical considerations, the individual demonstrates a commitment to honesty and accountability. This aligns with the LVMH hiring assessment test's emphasis on ethical conduct and responsible decision-making, which are crucial for maintaining stakeholder trust and the company's reputation. Acting with integrity, even when it might be less immediately convenient or financially advantageous, is a cornerstone of professional responsibility. An incorrect approach that involves withholding or selectively presenting information from the efficiency study would be a significant ethical failure. This could be construed as misleading stakeholders, violating principles of transparency, and potentially contravening internal company policies or broader ethical codes that mandate honest reporting. Another incorrect approach, such as implementing the efficiency measures without fully considering the ethical implications or seeking appropriate guidance, demonstrates a lack of due diligence and a disregard for potential harm. This could lead to reputational damage, loss of trust, and even regulatory scrutiny if the overlooked ethical issues have legal ramifications. A third incorrect approach, focusing solely on the financial benefits without acknowledging or addressing the ethical concerns, shows a narrow and potentially harmful perspective that prioritizes short-term gains over long-term sustainability and ethical standing. Professionals should employ a decision-making framework that begins with a thorough understanding of the situation, including all potential consequences, both positive and negative. This involves identifying ethical considerations and potential conflicts of interest early on. Next, they should consult relevant company policies, ethical codes, and, if necessary, seek advice from legal or compliance departments. The decision should then be made based on a clear assessment of how each option aligns with ethical principles and regulatory requirements, prioritizing integrity and long-term stakeholder interests over immediate pressures. Question 15. Risk assessment procedures indicate that a junior employee has overheard a conversation suggesting a potential breach of a competitor's intellectual property by a third-party supplier that LVMH does business with. The employee is unsure whether the information is credible or if it constitutes a reportable offense under LVMH Code of Conduct. Option A. Confront the supplier directly to gather more information about the alleged intellectual property breach. Option B. Share the overheard information with trusted colleagues in other departments to gauge their opinion on how to proceed. Option C. Disregard the overheard conversation as it is not directly related to LVMH operations and could create unnecessary complications. Option D. Immediately report the overheard conversation to the LVMH legal and compliance departments, providing all details, and await their guidance on further action. The correct answer is D. Immediately report the overheard conversation to the LVMH legal and compliance departments, providing all details, and await their guidance on further action. Explanation. This scenario presents a professional challenge due to the inherent conflict between maintaining client confidentiality and the potential for disclosing information that could prevent harm. The LVMH hiring assessment test, operating within a framework that emphasizes integrity and ethical conduct, requires individuals to navigate such gray areas with sound judgment. The core difficulty lies in balancing legal obligations, ethical principles, and the company's reputation. The correct approach represents best professional practice because it prioritizes a structured, ethical, and legally compliant response. It involves seeking guidance from appropriate internal channels, such as legal or compliance departments, before taking any action that could breach confidentiality. This ensures that any disclosure is made only after careful consideration of all relevant factors, including legal requirements, potential harm, and company policy. This aligns with general principles of professional responsibility and the need for due diligence in handling sensitive information. An incorrect approach that involves immediate, unauthorized disclosure of the information to external parties without consulting internal experts would represent a significant ethical and potentially legal failure. This bypasses established protocols, risks misinterpreting the situation, and could lead to unwarranted reputational damage for both the individual and LVMH. Demonstrates a lack of understanding of confidentiality obligations and the importance of following established procedures for handling sensitive information. Another incorrect approach, such as ignoring the information due to a desire to avoid conflict or potential repercussions, is also professionally unacceptable. This inaction can be interpreted as negligence or complicity, especially if harm subsequently occurs. It fails to uphold the ethical duty to act responsibly when aware of potential risks. A further incorrect approach might involve attempting to resolve the situation independently without proper authority or expertise. This could lead to unintended consequences, further complications, and a failure to address the issue effectively or ethically. The professional decision-making process in such situations should involve 1. Recognizing the ethical dilemma and potential risks. 2. Consulting internal policies and procedures regarding confidentiality and reporting. 3. Seeking advice from designated internal experts, e.g., legal, compliance, HR. 4. Documenting all steps taken and advice received. 5. Acting only after receiving clear guidance and authorization, ensuring all actions are proportionate and legally sound. Question 16. Consider a scenario where, while reviewing financial records for a high-profile client, you notice a pattern of transactions that appear unusual and potentially indicative of money laundering activities. You have no direct proof, but your professional judgment suggests a serious issue that could have significant legal and reputational consequences for LVMH. What is the most appropriate immediate course of action? Option A. Ignore the observations to avoid potential client dissatisfaction and any personal repercussions. Option B. Immediately escalate your concerns and the observed pattern to the company's legal and compliance departments for a formal investigation. Option C. Confront the client directly with your suspicions to gauge their reaction and gather more information. Option D. Report your suspicions directly to external law enforcement agencies without informing internal departments. The correct answer is B. Immediately escalate your concerns and the observed pattern to the company's legal and compliance departments for a formal investigation. Explanation. This scenario presents a professional challenge due to the inherent conflict between maintaining client confidentiality and the potential for uncovering illegal activities that could harm the company and its stakeholders. The pressure to act quickly and decisively is high, but so is the risk of making an unfounded accusation or violating privacy rights. Careful judgment is required to balance these competing interests. The correct approach represents best professional practice because it prioritizes a thorough, objective investigation before taking any action. This aligns with ethical principles of fairness and due process, as well as regulatory expectations that require evidence-based decision-making. By consulting with the legal department, the individual ensures that any subsequent actions are compliant with relevant laws and company policies, thereby mitigating legal and reputational risks. This methodical approach upholds the integrity of the investigation and protects the rights of all parties involved. An incorrect approach that involves immediately reporting the suspicion to external authorities without internal verification would be a regulatory and ethical failure. This premature action could lead to a false accusation, damaging the reputation of the individual and the company, and potentially incurring legal penalties for defamation or malicious reporting. It bypasses the company's internal control mechanisms and fails to respect the principle of investigating internally first. Another incorrect approach, which is to ignore the observation due to fear of repercussions or potential client dissatisfaction, represents an ethical failure to act with integrity and a potential breach of duty. This inaction could allow illegal activities to continue, leading to significant financial losses, regulatory sanctions, and severe reputational damage for LVMH. It demonstrates a lack of professional responsibility and a disregard for the company's ethical standards and legal obligations. Finally, confronting the client directly with the suspicion without proper investigation or legal counsel is an incorrect approach. This could alert the client to the investigation, allowing them to conceal or destroy evidence, and could also lead to legal challenges if the accusation is unfounded or if the confrontation is handled improperly. It undermines the investigative process and exposes the company to unnecessary legal risks. The professional decision-making framework for similar situations involves a structured approach. 1. Observe and document. Record all relevant details objectively. 2. Assess risk. Evaluate the potential harm to the company and stakeholders. 3. Consult internally. Seek guidance from appropriate internal departments, e.g., legal, compliance, HR. 4. Investigate thoroughly. Gather evidence in a systematic and lawful manner. 5. Act based on evidence. Make decisions and take actions only after sufficient evidence is obtained. 6. Maintain confidentiality. Protect the integrity of the investigation and the privacy of individuals involved. Question 17. The investigation demonstrates that a senior manager is tasked with evaluating candidates for a critical role within LVMH. One of the candidates is a close personal friend with whom the manager has recently shared significant personal events. The manager is aware of the potential for this relationship to influence their judgment, even subconsciously. What is the most ethically sound and professionally responsible course of action for the manager? Option A. Discreetly provide the candidate with insights into the evaluation criteria and desired qualities to help them prepare, without explicitly stating it's for their benefit. Option B. Immediately disclose the personal relationship to their superior and recuse themselves from the evaluation and decision-making process for this candidate. Option C. Evaluate the candidate based on their qualifications, but make a mental note to advocate for them during the final decision-making discussion, emphasizing their strengths. Option D. Proceed with the evaluation as normal, trusting their professional judgment to remain objective and unbiased due to their extensive experience. The correct answer is B. Immediately disclose the personal relationship to their superior and recuse themselves from the evaluation and decision-making process for this candidate. Explanation. This scenario presents a professional challenge due to the conflict between a personal relationship and the obligation to maintain objectivity and integrity in a business context. The core of the dilemma lies in the potential for bias, even if unintentional, to influence decision-making processes, which can undermine trust and fairness. The LVMH hiring assessment test, like many professional evaluations, emphasizes adherence to ethical standards and regulatory compliance. The correct approach represents best professional practice because it prioritizes transparency and adherence to established ethical guidelines. By disclosing the relationship and recusing oneself from the decision-making process, the individual upholds the principles of fairness, impartiality, and avoidance of conflicts of interest. This aligns with general ethical principles and is often codified in company policies and professional conduct guidelines that aim to prevent undue influence and ensure that decisions are based on merit and objective criteria. An incorrect approach that involves proceeding with the evaluation without disclosure would be a significant ethical and potentially regulatory failure. It breaches the duty of candor and could lead to accusations of favoritism or bias, damaging the reputation of both the individual and LVMH. This failure stems from a disregard for conflict of interest policies and the fundamental ethical requirement to act with integrity. Another incorrect approach, such as attempting to subtly influence the outcome in favor of the acquaintance, represents a severe ethical breach and a violation of professional responsibility. This action directly undermines the integrity of the assessment process and constitutes a form of misconduct, potentially leading to disciplinary action and legal repercussions if it violates specific employment laws or company regulations. The professional decision-making process for similar situations involves a structured approach. 1. Identify the potential conflict of interest. 2. Consult relevant company policies and ethical guidelines. 3. Disclose the conflict to the appropriate authority or supervisor. 4. Seek guidance on how to proceed, which often involves recusal from decision-making. 5. Maintain objectivity and ensure that all actions are transparent and defensible. Question 18. Upon reviewing the operational efficiency of a flagship LVMH boutique, a proposal emerges to streamline the clienteling process by automating certain personalized communication touchpoints. This automation aims to reduce the workload on sales associates and ensure consistent messaging. However, concerns are raised about potentially diminishing the bespoke and intimate nature of client interactions that define the luxury retail experience. Which of the following approaches best navigates this challenge while upholding LVMH commitment to unparalleled customer service and brand prestige? Option A. Introduce the automated communication system with a disclaimer to clients acknowledging the shift towards a more standardized approach, framing it as a necessary step for operational efficiency. Option B. Implement a phased rollout of the automated communication system, starting with less sensitive client segments, and conduct rigorous A/B testing to measure client engagement and satisfaction levels, while simultaneously training sales associates to leverage the system as a tool to enhance, not replace, their personal relationships with clients. Option C. Proceed with full implementation of the automated system across all client segments immediately to capture the maximum efficiency gains, assuming that clients will adapt to the new communication style given the brand's reputation. Option D. Delegate the decision-making entirely to the IT department, tasking them with selecting and implementing the most cost-effective automation solution, with minimal input from boutique management or sales associates. The correct answer is B. Implement a phased rollout of the automated communication system, starting with less sensitive client segments, and conduct rigorous A/B testing to measure client engagement and satisfaction levels, while simultaneously training sales associates to leverage the system as a tool to enhance, not replace, their personal relationships with clients. Explanation: this scenario presents a professional challenge because it requires balancing efficiency gains with potential impacts on brand integrity and customer experience, which are paramount in the luxury sector. The need to optimize processes must be weighed against the risk of alienating a discerning clientele or diluting the brand's exclusive image. Careful judgment is required to ensure that process improvements do not inadvertently compromise the core values and perceived quality of LVMH brands. The correct approach represents best professional practice because it prioritizes a holistic and data-driven evaluation of process changes. It involves understanding the potential downstream effects on customer perception, brand equity, and compliance with LVMH stringent quality standards. This method ensures that any optimization is aligned with the company's strategic objectives and ethical commitments, particularly concerning customer satisfaction and brand reputation, which are implicitly governed by LVMH internal codes of conduct and overarching commitment to excellence. An incorrect approach that focuses solely on cost reduction without considering the impact on customer experience would be professionally unacceptable. This could lead to regulatory or ethical failures by violating implicit customer service standards expected within the luxury market, potentially leading to reputational damage that, while not always a direct breach of a specific law, undermines the brand's value proposition and could attract scrutiny from consumer protection bodies or industry watchdogs concerned with fair practice. Another incorrect approach that implements changes without adequate stakeholder consultation, particularly with brand representatives or customer service teams, risks overlooking critical nuances of brand identity and customer interaction. This failure to engage relevant parties can result in process changes that are technically efficient but practically detrimental to the brand's image and customer loyalty, representing an ethical lapse in due diligence and a failure to uphold the brand's established service levels. A third incorrect approach that relies on anecdotal evidence or superficial observations rather than systematic analysis to justify process changes is professionally unsound. This lack of rigorous investigation can lead to poorly conceived optimizations that fail to achieve their intended goals or, worse, create new problems, demonstrating a lack of professional diligence and a disregard for evidence-based decision-making, which is a cornerstone of effective management and ethical conduct. The professional reasoning process for similar situations should involve a structured approach. First, clearly define the problem or opportunity for optimization. Second, gather comprehensive data, including customer feedback, operational metrics, and brand guidelines. Third, identify potential solutions and rigorously assess their impact on efficiency, cost, customer experience, brand integrity, and compliance. Fourth, consult with relevant stakeholders across departments. Fifth, implement changes incrementally with robust monitoring and evaluation. Finally, be prepared to adapt or revert if the optimization negatively impacts key performance indicators or brand values. This systematic and inclusive approach ensures that process improvements are sustainable, ethical, and aligned with LVMH commitment to excellence. Question 19. The risk matrix shows a moderate likelihood of data entry errors in the current inventory management process, with a high potential impact on stock accuracy and financial reporting. A proposed process optimization aims to significantly reduce manual data entry by automating certain steps. Which of the following strategies best balances the pursuit of efficiency with the imperative to maintain data integrity and compliance? Option A. Prioritize the automation of the most time-consuming manual tasks first, without extensive pre-testing, to demonstrate immediate cost savings to management. Option B. Immediately deploy the automation across all departments to realize the maximum efficiency gains as quickly as possible, assuming the new system will inherently reduce errors. Option C. Rely on the IT department to manage the automation rollout and assume they have already accounted for all potential data integrity issues. Option D. Implement the automation in phases, starting with a pilot program in a single department to thoroughly test its accuracy and impact on downstream processes before a full rollout, ensuring robust data validation checks are integrated. The correct answer is D. Implement the automation in phases, starting with a pilot program in a single department to thoroughly test its accuracy and impact on downstream processes before a full rollout, ensuring robust data validation checks are integrated. Explanation. This scenario presents a professional challenge because it requires balancing efficiency gains with potential impacts on data integrity and compliance, particularly within the context of LVMH operational standards and any applicable regulatory frameworks for luxury goods or retail. The core tension lies in optimizing a process that, if not managed carefully, could inadvertently introduce errors or bypass necessary controls. The correct approach represents best professional practice because it prioritizes a thorough, phased implementation of process optimization. This involves detailed analysis, pilot testing, and stakeholder engagement before full rollout. This methodology ensures that potential risks are identified and mitigated proactively, aligning with principles of good governance and operational excellence. It also demonstrates a commitment to maintaining high standards of quality and accuracy, which are paramount in the luxury sector. Furthermore, this structured approach is often implicitly or explicitly supported by internal company policies and best practices for change management and risk assessment, which are designed to prevent disruptions and ensure compliance. An incorrect approach that focuses solely on immediate cost reduction without adequate risk assessment would fail to uphold professional standards. Such an approach could lead to operational disruptions, reputational damage, and potential breaches of internal controls or external regulations related to data handling or product authenticity. For instance, bypassing quality checks to speed up a process could result in defective products reaching customers, leading to significant financial and brand damage. Another incorrect approach that involves implementing changes without consulting relevant departments or stakeholders overlooks the interconnectedness of business processes. This can lead to unforeseen consequences, resistance to change, and a failure to achieve the intended optimization. It demonstrates a lack of collaborative problem-solving and can undermine trust and communication within the organization. Ethically, it fails to consider the impact of changes on employees and their roles. A third incorrect approach that relies on anecdotal evidence or superficial observations to justify process changes is professionally unsound. Decisions should be data-driven and based on rigorous analysis. Relying on assumptions rather than evidence can lead to ineffective or even detrimental changes, wasting resources and potentially creating new problems. This approach lacks the due diligence expected of professionals responsible for operational efficiency and risk management. The professional decision-making process for similar situations should involve a systematic approach. 1. Clearly define the problem and the desired outcome of the process optimization. 2. Conduct a comprehensive analysis of the current process, identifying bottlenecks and areas for improvement. 3. Identify and assess potential risks associated with any proposed changes, considering operational, financial, compliance, and reputational impacts. 4. Develop a detailed plan for implementing changes, including pilot testing, stakeholder consultation, and training. 5. Monitor the performance of the optimized process and make adjustments as necessary. 6. Ensure all changes comply with relevant internal policies and external regulations. Question 20. Examination of the data shows that the current client onboarding process for bespoke services is time-consuming, leading to delays in service delivery and potential client dissatisfaction. To address this, a proposal has been made to streamline data entry by allowing junior staff to bypass certain verification steps, with the understanding that senior staff will review the data retrospectively. Which of the following approaches best addresses the need for process optimization while upholding professional standards and regulatory compliance? Option A. Focus solely on reducing the number of staff involved in the initial data entry to cut down on processing time, without altering the existing data entry procedures. Option B. Implement a phased rollout of a new digital onboarding platform that automates data validation and cross-referencing, coupled with enhanced training for all staff on data accuracy and security protocols, and a pilot program to identify and rectify any issues before full deployment. Option C. Immediately allow junior staff to bypass initial data verification steps to expedite the onboarding process, relying on retrospective review by senior staff to catch any errors. Option D. Introduce a simplified data entry form that omits several fields, assuming that missing information can be requested from clients later if needed. The correct answer is B. Implement a phased rollout of a new digital onboarding platform that automates data validation and cross-referencing, coupled with enhanced training for all staff on data accuracy and security protocols, and a pilot program to identify and rectify any issues before full deployment. Explanation: this scenario presents a professional challenge because it requires balancing efficiency gains with potential impacts on data integrity and regulatory compliance. The core of the challenge lies in identifying process improvements that enhance operational speed without compromising the accuracy or security of sensitive client information, which is paramount in the luxury retail sector and subject to stringent data protection regulations. Careful judgment is required to ensure that any optimization does not inadvertently create vulnerabilities or violate established protocols. The correct approach represents best professional practice because it prioritizes a thorough, phased implementation of process changes. This involves detailed impact assessments, pilot testing, and robust validation before full rollout. This methodology aligns with principles of good governance and risk management, ensuring that changes are controlled and their effects are understood. From a regulatory perspective, this systematic approach helps demonstrate due diligence in maintaining data integrity and compliance with relevant data protection laws, such as those governing the handling of personal customer data. It also fosters a culture of continuous improvement that is both responsible and sustainable. An incorrect approach that focuses solely on speed without considering downstream effects is professionally unacceptable. This could lead to increased error rates, data breaches, or non-compliance with data handling regulations. For instance, implementing a new system without adequate testing might bypass critical validation steps, resulting in inaccurate inventory counts or customer records. This failure to ensure data accuracy and security would be a direct contravention of regulatory expectations and ethical obligations to protect client information. Another incorrect approach might involve bypassing established change management protocols, leading to unforeseen system conflicts or operational disruptions. Such actions demonstrate a disregard for established best practices and regulatory frameworks designed to ensure stability and compliance. The professional reasoning process for similar situations should involve a structured approach to change management. This includes clearly defining the objectives of the process optimization, identifying all stakeholders, conducting a comprehensive risk assessment, developing a detailed implementation plan with clear milestones and rollback strategies, and establishing metrics for success that encompass both efficiency and compliance. Professionals should always consider the potential impact on data integrity, security, and regulatory adherence as primary factors in evaluating any proposed process change.